morning and welcome to our latest virtual roundtable brought to you by Development Finance Today and kindly sponsored by APAK Group, which is a Sopra banking software company. Thank you very much for joining us today. My name's Beth Fisher. I'm the editor at MediaNet. We're the publisher of online titles Bridging and Commercial and Development Finance Today, and also the bi-monthly print Bridging and Commercial magazine. Today, we will be identifying technology that will improve the property development finance lending process. The pandemic has already accelerated the investment and use of technology in the specialist lending process, which we have seen through the rise of AVMs, e-signatures, automated underwriting, and also machine learning ID verification, among many others. Even before COVID-19, our publications have reported on countless new broker portals, comparison platforms, and sourcing systems which have come to the market over the last few years. These have offered more efficient ways to source finance and communicate with all parties in the transaction. However, fintech has traditionally been seen as inaccessible, expensive, and fairly off-putting to lenders when it comes to thinking about how new systems or models can be integrated and adopted within the wider team. Considering we've spent the last year relying on technology in order to continue to work remotely, we think it's the perfect time for a group of development lenders and brokers to get together and exchange views on what tech solutions have been the most transformative for their business and others throughout the whole crisis, and also what has made their lives easier. The development finance market is built on having trusted relationships between lenders, brokers, and developers, with much of the lending process being on the ground, at sites, and in person. Therefore, combining this personal touch element with technology is key. So I'll be interested to hear how the panel thinks that this can be balanced as the industry further innovates. We hope today's discussion will uncover how development lenders have changed their approach to technology as a result of the pandemic, and whether tech advances could lead to greater transparency, speed, and accuracy when it comes to drawdowns, especially during a volatile time when we are largely seeing reduced appetite for risk. Joining me are a fantastic panel of experts in the development finance market. So now is the perfect time for me to hand this over to our panelists, who will each spend a couple of minutes introducing themselves. So I'd like to start with Mark, please.
Yeah, hi everyone. Mark Elliott. I'm business development manager at APAK Group, which is a Sopra banking software company. We supply software which runs the development finance books of some of the major players in the development finance industry, like United Trust Bank and Close Brothers. But we're now marketing a more off-the-shelf version of the product called Aureus to lenders whose portfolios are in the tens and hundreds of millions rather than the billions of pounds range. I'm not a believer in tech for the sake of tech. Tech needs to be meeting a business need or solving a business problem. So I guess I'm really interested today. Beth introduced us as experts in a panel of experts in the development finance industry. I'm definitely not that. I'm interested to hear in what you have to say. I'm a mere software provider to the development finance industry. So I have that perspective on your industry, but I'm going to be interested to hear people's views on where they think innovation in technology can help solve your business problems for the development finance market, particularly as we move into a post-pandemic world. So looking forward to the discussion.
Thanks, Mark. Emma?
Good morning, everybody. I'm part of the deal team at Maslow Capital. Maslow Capital is a specialist provider for development finance within the UK. Been established for 11 years, and we would focus on residential primarily to fund residential that is satisfying the demand that exists in the UK. So typically we can do we focus on developers who are experienced. Very interested, Mark, to hear you say where tech should either solve a problem and not contribute kind of to an elongated process And that's certainly something that we would believe in. So I like that you've said that to start off with, certainly. So yeah, I think this is a good topic and a good discussion to have in the current climate.
Thanks, Emma. Katie?
Hi, good morning, everyone. My name is Katie Katani. I'm the Associate Director of Lending at Capitalise. And for those who don't know who we are, Capitalise is one of UK's leading property finance platforms. So we are actually a fintech company providing bespoke and flexible finance solutions purely to the prime property residential market. And like I said, we're very niche. We purely specialize in prime property that's in prime central London, prime outer London, and prime home counties. We've been established now for just over 5 years. And we did exceptionally well actually during the pandemic. 2020 was our strongest year. We've now closed over 100 million loans, which is funding developments of over 480 million pounds worth of assets. We've had 0 capital losses. And I think a lot of our success is due to the technology we've adopted. Our CEO, the founder of the business, is an expert in the fintech industry. So yeah, our aim this year is to grow and provide more loans.
Thanks for that. Adele?
Hello, my name is Adele Turton. I've been a broker for nearly 20 years. I specialise in development, bridging and term lending. I've recently set back up my original business, Plan A, with the rebrand of Blanc Property Finance. I've been involved, probably as everybody else, in an unprecedented amount of development transactions over the last 12 months, and it certainly doesn't look like it's slowing down anytime soon. Anything from resi schemes, resi to commercial, church conversions, data centre, quarries, everything. It's definitely alive out there at the minute. I am very interested in this, although I don't have a lot of experience with tech within the process. So that I think, although I'm quite green with this, I'm really keen to see how this can add and certainly bring benefits to what we do. I've seen developments within the legal end of it with the e-signatures and Zoom, ILA being given over Zoom. So I'm very keen to see how we can put it into the actual process involved in development.
Thanks for that, Adele. Natasha?
Hi everyone, I'm Natasha from Next Route Finance. We are a niche brokerage that specialises in just development finance, so that's what I do all day long. Our typical clientele are obviously house builders and property developers who are looking to scale and actually grow their pipeline of work. Although saying that, we do have kind of a range of different levels, so people that are just starting to get into the space as well, which is why I think it's specialist as brokers. I think it's really important for us to be specialist in that, because we get a real overview of all the different cases, and that's generally what I love most about it, is the fact that every person, every building and every scheme is so different that just every case is unique. Obviously in relation to today's topic, which is tech, I'm a millennial, so tech is really all I've known. It's been my whole life, but I don't think it's actually been, I think it's been quite slow in relation to this industry to be adopted, but I have actually, we've started to see some innovative stuff happening in the space, which is really exciting. But again, completely agree with the no need for tech if you don't actually need tech kind of thing. So I know we've got some interesting people on here today, so I'm really looking forward to what everyone has to say about it, really. So thank you for having me.
Thanks for joining us, Natasha. And Ashley?
Hi, good morning. Big thank you to MediaNet and APAC for hosting today. Really interesting topic. My name is Ashley Olsen. I'm Chief Executive of Magnet Capital. We are a leading provider of development finance. We're extremely unique to our market in the fact that we only fund developments. We don't do any bridging or any other sorts of lending. We target the smaller end of the market that's traditionally underserved. So our loans range from 200,000 up to 2 million. So we like the small house builder, nice manageable projects. So that's really where we come in. We are also extremely unique in the fact that we were one of a handful of development lenders to be completely consistent in our lending throughout COVID, throughout the first lockdown in particular. We didn't change our criteria. We honoured every single deal that we offered on, and we backed every single project, even though there were obviously many delays, many issues on site popping up left, right, and centre. And I suppose our experience shone through in the fact that we were able to deal with all of it. So yeah, we're big advocates for the construction industry. We understand building, we understand what we're lending on. So I'll be interested to obviously hear some of the other thoughts about how tech can further improve what we do.
Brilliant, thanks for that, Ashley. I just want to remind the audience, just before we kick off with our first question for the panel, that you can submit your own questions throughout the discussion. There's a little chat box in the control panel which should appear on the right of your screen. So please do feel free to ask questions either for the entire panel or individual panelists. I will look through those throughout the discussion and look to put them out to the panel at the end of the conversation. So I'm going to kick off with my first question, which is all about how lockdown has accelerated technology within the development market. Mark, I'm going to start with you in terms of where you think lockdown has changed lenders' approach to technology, because I assume you're going to be the one who's going to be getting the calls on this in terms of lenders wanting to implement something new.
Yeah, I mean, I think it's interesting. The immediate reaction was actually not to contact technology providers, and I think that's an interesting point in itself, really. Obviously the massive expansion of use of video conferencing tools like Zoom and Teams was something that we all got used to very, very quickly, and there were specific issues around supporting things like CBILS and bounce back loans that came through the industry as well. But actually, I was quite surprised at that people didn't tend to leap straight to us as a technology provider and ask for change very quickly. I suspect that's partly because people are wary of technology change, actually, and that it, as you've mentioned, I mean, has a reputation for being costly and not terribly responsive historically. So I think that you know that's one problem. But I think that it's certainly true that the distancing requirements that we've all had and have meant that the advantages of having distributed systems where everybody can get access to a single point of truth for data has become incredibly important. I mean, as everybody moves home, you can't be all looking at the same spreadsheet at the same time. So that kind of distributed data model is really, really important.
Definitely, I'd agree with that, and also just from what you're saying now, obviously the process of it has historically been expensive, and just something which over the last 12 months we've seen a lot of lenders kind of not get well for some lenders, you know, they've tried to become more lean and look at how they can save money, you know, in a volatile environment. So investing a lot of money in technology is a big step when other lenders are doing that. Emma, how has Maslow changed its changed its approach to technology during all of this, or hasn't it? Has it stayed the same?
So if I look back over the last 3 years in which I've worked at Maslow, there's always been a unique focus in the company to continually invest in the platform which manages our debt quantum. And we have funded about 2.4 billion of real estate since we opened up, which is a huge amount of capital. But over time, we realized the importance of having that data at the touch of a button. So last night when I was thinking about the questions that you sent through, Beth, I actually touched base with the tech specialist within our company. So I front with clients, etc. What's important for me is how we get the information to process inquiries and to front that. But in the background, we're managing a huge big platform of debt for a number of institutions that we partner with. So it's very important that that's managed accurately, and that we have quarterly QSM meetings where we have to advise those debt partners of how everything is going. So we've seen an increase in the time and money spent in our tech within our company. So we've got 3 very smart individuals that are working probably much harder than the deal team behind the scenes to make sure that that's all very fluid. So the normal things like Mark has said, Slack, Zoom, Teams, but also the sharing of spreadsheets. You know, how do we do that? How do we access? And at the start of lockdown, we had some, I suppose, fraught conversations where we were all trying to have access to the one spreadsheet, etc. But what we have is a bespoke built platform to manage all of our loan portfolio, and that's constantly being updated and amended to accommodate multiple users at multiple times. So that did help. Simple things like everybody having the ability to access the payment system to pay developers on a monthly basis. That's very important, that service levels are maintained throughout the pandemic so that people got paid on time on a monthly basis, keeping in line with SLAs. One of the issues we came across very quickly was obviously we couldn't do site visits to check that work was being done. So we were reliant on, we actually had an app for site visits where you could take pictures. You would arrange to go in when nobody else was there, take the pictures, and then post them into our fund platform. And you could, at the click of a button, everyone could see all of the pictures from the sites. But we continue to develop that platform. There's changes being made every week. In Slack, we've got 4 different channels that suggest changes so that things aren't duplicated, to track conditions precedents for loans. Lots of other things that I'm sure we'll cross into over the course of this chat, but yeah, we've seen a continued focus internally.
I think it will be interesting to see how lenders continue to use some of these kind of tech innovations after COVID. You know, when a lot of lenders are now back on sites and they're able to visit clients. But it would be interesting to see if there were any time savings or efficiencies that these tech provisions have given them, and if they continue to use them, or it becomes more of a hybrid approach. Ashley, how have you used tech over the last 12 months, and has your attitude towards it changed?
I think it's an interesting one, because as an industry, I think it's fair to say we are slightly old-fashioned in the way we do things. We got a little bit stuck in our ways, and that's I suppose I'm a millennial, and I was brought into an old-fashioned way of doing things, so I do things in an old-fashioned way. We as a small and relatively lean business are always obviously looking for ways to improve. But then when COVID happened, we were obviously forced into adopting or changing and adapting in all the necessary ways. And the real paradox for us as lenders is, how do we keep enhancing the borrower experience and the way we work with our brokers without adding to our risk? And that's, I suppose, some of the troubles that we had was, okay, it's great, we could perhaps do some stage releases based on pictures, but that only goes so far. Pictures will only it'll give you a little snapshot of what you're actually lending on. I, for one, love sitting face to face with people and looking in their eyes, and we've obviously not been able to do that for a long time, and I really miss doing that as well. When we're assessing a project, we're looking at a marriage of the client who we're lending to and the asset that's going to be built, and we have to look at both things. Yeah, we could do more calls on Zoom, but thankfully we started already having people back into the office where we can. We've already started our program of making sure we visit our sites. I'm back ruining my suits going up and down ladders again, because you can't beat that. You can't replace that, and I've not seen anything that does replace that for now. I'll give you an example. We had a project we did about 18 months ago where the surveyor report came in and it said the site is a high value property, but it's opposite a caravan park. And we thought, oh, red lights, you know, let's look into this, etc. When I went down there, it turns out the caravan park was a space for 2 caravans and neither of them were there. We only found that out from actually getting a flavour of what it's about, and yeah, our surveyor was able to relay that back to us. But you know, that was us. That was a human touch that made that decision.
Absolutely, I think it's really key. It is definitely one of those things where we can't rely on technology solely, but that this hybrid and how it continues going forward will be definitely something which will continue in discussion as we go throughout the year. Katie, would you add anything to that in terms of how you've been using technology?
Yeah, so as I mentioned earlier, we are actually a fintech business. So the company, when it was set up, we invested heavily in technology. It's actually our second biggest spend. So we were already prepared for remote working. The lockdown actually didn't have much of an effect on us. We were using systems like Slack and Zoom and Teams even before the lockdown. So we were already prepared. Everyone has laptops, for example. So the way the business was set up was that so we can work from anywhere at any time. So we don't have to be in the office. We all have laptops. We all use mobile phones. We don't have landlines, for example. It's all voice over IP. So the day lockdown was announced, we kind of just, the next day everyone was working from home. And didn't really have much of a big impact on our business. We actually, like I said, had our biggest year in terms of inquiries. We screened over 5.5 billion inquiries last year and closed over 10 loans, 10 multi-million pound loans. So we're very much in favour of technology. Anything we can do to improve our lending process, we'd always welcome. If we can use software, then yeah, we're always welcoming new ideas.
Thanks for that. I'm interested to know from the brokers on today's panel, Adele and Natasha. I'm interested to know what technology you think the development lending market can now not live without.
Definitely Zoom. Definitely Zoom. We've had a couple of re-inspections done on a video walk round, believe it or not, when people could not move about. But I would say, without a doubt, Zoom, being able to sign over Zoom as well. The security documents is, invaluable. We had a client that was actually in South Africa, and the lender was insisting that they came to the UK in the middle of a lockdown to sign, which was just, it was just crazy. A lot of people have moved with it. I think if you're signing something over Zoom and you record the signing, that's got to be more evidence than a wet ink signature, in my opinion, because you've recorded somebody doing it. Natasha?
Yeah, I was just going to add to that because as you said, we're quite like as brokers, we don't use a huge amount of tech anyway because we sort of leverage off of the lenders. You know, if they have apps and they have application processes, we have to use what they want us to use. So as a broker, we really have limited resources really. So Zoom's massively come in helpful because obviously you can still have that personal approach with people. And I think sometimes in the past it used to be very much like you'd have a phone call or you'd go and meet someone, whereas now it's very much like you say, oh, do you want a phone call? And then they'll be like, well, do you want to have a Zoom instead? It's become very much the norm. So that's massively a thing. I think for developers, from a lender's perspective, I think they probably a good software for them to be able to manage the stage payment through this process. Obviously, development finance is very much about speed and accuracy. So if they can use technology to be able to make the application quicker, but still also maintain that accuracy, then I would imagine from them that's almost forced them to have to think outside the box a bit. But yeah, from a broker's point of view, I think we've got our phones and our laptops and Zoom, and we're good to go.
Do you mind if I jump in with a quick question there? as you guys as brokers, do you find that you gravitate more towards lenders who, you know, are perceived to have better tech?
Yes, that's not the biggest deciding factor. I think, as with any type of funding, it's criteria. Sorry, I've got messages coming through. It comes down to criteria, and the tech added on to that will then make the process easier, which forms part of the overall feel of the deal. The guy having to come from South Africa in a lockdown was just bonkers. You then can't use that lender, so you then start to discount people. So people who are using tech to make the process easier, then yes, you would. But it's like one part of it, if that makes sense.
Yeah, I completely agree with Adele. I think that there's more to it than that. I think that obviously technology does help, but I feel like everyone, all the lenders are different, but they've all sort of taken their individual approaches to it. So I wouldn't say it was a deciding factor for us to use a particular lender. But again, it comes down to customer service. So if the technology is enhancing the customer service and that's making a better experience for the customer, then that's obviously a massive win-win. So that's what I think.
Could you say that tech would come in sort of three aspects for a lender? And Ashley made a good point at the start. It's a tangible product that we're all involved in, right? It's looking at an actual building coming up out of the ground, and you do need to be on site to see it, right? When it's a tangible product, and relationships to that effect are more tangible. So at the beginning, from a broker client side, it needs to be front facing, you know, out on site, seeing everything, meeting the client, building that relationship process. Then tech starts to come in when you get the inquiry in. For me, the biggest frustration with the underwrite, so from approval into underwrite, is that you have the same amount of people involved in every transaction. So you've got a valuer, QS, lawyers, introducer, client, and lender, right? So, and they all look at the same information. And very simply, the easiest way is to set up a centralized Dropbox. You run a spreadsheet, you get everyone to put all the information in, right? And then you share that Dropbox link with all of the parties, okay? And there isn't a constant flow of emails, etc., etc. But then this, as you said, Adele, comes down to criteria and to each lender's preference for underwrite and how detailed you get. What information is needed before credit and what information is needed after credit. And then the third part of the tech is how the lenders themselves run funding lines and manage all of that in the background, which shouldn't really affect the client at all, other than having the benefit of those fast turnarounds for payments. So I think it's sort of like tech can come in three stages. One part I don't think we'll see continued is virtual tours of properties. You know, I've seen some really bad virtual tours online with properties, and all they served a purpose for a period, right? But I think your end consumer and your end purchaser is quite switched on and very smart, and it's more of the feel of something, their personal preference, and they want to see how it feels to live in an area. You won't get that from a virtual video. And we had quite an interesting conversation on a deal that we completed on before Christmas, in quite a unique location, that if somebody was buying there, they would want to get a real feel for the area. And they, with a marketing company, were doing virtual tours, but to the point where they had the noise of the area, and you could put on your virtual mask and actually walk around and feel as if you were in the room, but to the point where the noises, the actual feel of the building came through. I thought that was quite clever. You open the windows and you can see the actual scenery, but that costs money, right? And that requires a budget. So
indeed, I'd pick up on the interconnectedness of the parties and everybody having access to the same information in the same place. I mean, you talked about just doing it through a Dropbox. I'd certainly be an advocate of having centralized systems which are accessible from distributed locations for that kind of thing. I mean, I think it does then carry on actually into the servicing the loan once it's up and running, that actually, if you think about the way your home banking works, you've got internet banking and you can see what's happening to your loans and your deposit accounts, and and actually that doesn't really seem to exist in this market for borrowers. They can't log on to something and say, well, actually, how much do I owe? When's my next? When have I told them I'm going to pay them next? What you know, that kind of thing doesn't seem to be there. And actually, I don't really understand why that's not there. I don't understand what is it that's really not important to people, or is it just that because the underlying loan management has tended to be kind of, oh, we've got some spreadsheets over here and a database over here, and it's actually just too hard to layer the single view on the top. I mean, I think that kind of single point of truth thing for all parties involved is really, really important, and actually adds to reducing risk, increasing customer service, increasing efficiency. Everybody benefits, I think.
Yeah, one of the good things, if you were to, at the touch of a button, access your development finance account, would be to track unit sales and monthly drawdowns and check your interest capitalization. Yeah, it's a very, very good point, very valid point. I think maybe it's because of how your development loans are structured in a three-part process. You've got your acquisition fee loan, your construction loan, and your interest loan, and the three of those kind of tie together and vary at different points. Maybe that has something to do with it. I do think systems are catching up. I've been doing this for 18 years, and it's certainly, when I started, it was all run off Excel, you know, so it's certainly much better, and it is getting better, but it's slow.
Yeah, and I agree with that, and I think that, as the point we've made in the past, it's been expensive. You know, the kind of systems that are being used by the large bank lenders have been expensive to deploy and expensive to run, and I think that taking that kind of functionality and packaging it up in a way that allows it to be supplied at a reasonable price has been the challenge. I mean, I would like to think that we're getting there with that, but I would say that, wouldn't I? I
think it's interesting to see the kind of disparity between how technology is being utilised. Emma, you made an interesting point earlier about the virtual tours, which estate agents were providing, and where you've got, like you say, on one end of the spectrum, you've got the whole kind of virtual experience where you can see and feel and hear everything, and that you would do, which would add some value, especially if people are overseas and they're looking at purchasing something in the UK potentially. And then the other end of the spectrum, I mean, I experienced it because I bought last October, and one of the virtual tours I was on, it was just basically a 360 degrees picture. So it's not, you can see that on the website anyway, and so that sort of thing doesn't really add value. So it's I guess it's how much of, you know, where it is on the scale of what it's adding, or whether it's just there for tech's sake, which I think one of you mentioned earlier anyway. I was going to just pick up, Natasha, you mentioned earlier that you as a broker, you tend to leverage on other lenders' technology. There's not a huge amount that brokers implement themselves, but there have been quite a few innovations which have launched over the last few years. You know, there's been a lot of broker portals. I know that they are launched by lenders, but there's also been quite a few comparison sites and sourcing platforms. Do you utilize them often? Like, what's your kind of experience with those? Because we have seen quite a few enter the market, and I'm interested to know the take up of those.
Yeah, I mean, it's a really good point. We don't actually, just because I don't think that development finance is so bespoke that I don't feel like it's an off-the-shelf product. So there's not really some of the sourcing softwares, like you said, almost that have a chart of all the different rates. They're sort of rates that don't necessarily apply to a given project when you then factor in all the other factors that go with that. So, I mean, there's probably, like you said, there's probably people out there sort of developing those types of things right now. And I wouldn't be opposed to, I'm quite open-minded with tech, and I think it's going to help. We definitely would give it a go. But in terms of the process that goes with development finance and the product that it is for people, I think there's so much more to it than it's just a rate. So we don't personally, we underwrite, and we sort of bespokely do all of our cases with all the lenders and sort of private investors and things that we have on panel. So we don't really utilize that much tech, to be honest, as a broker. Like I said before, we use sort of normal business software like CRMs and you know, the apps that you have on your phone and things through lenders. But in terms of us actually having our own software, we have our own systems in house, but there hasn't been that need for it. And sometimes I feel like, you know, stuff like Excel for us has worked in the past, and you don't almost need to overcomplicate things. So we work with the lenders and use what they use, and that, to be honest, to date, that has been really effective. But in terms of sort of things that have popped up on the market, I don't fully trust them yet, if I'm honest.
Do you feel, Natasha, is the inquiry stage for development lenders, because each lender would look at different aspects, and then you send through one inquiry and then you get asked different questions from different people. If that was automated, do you think that would help?
Yeah, I mean, I guess so. Yeah, I think probably would, but I'm all for that, sort of having a conversation with people and being able to really like understand a case. And sometimes I think that's the difficulty, is sometimes questions pop up that would maybe apply to one thing but not necessarily something else. So it's I think at this stage, I think developments are still very much a hands-on people kind of approach, you know, with site visits and things. Like even like you mentioned earlier with the over lockdown, we noticed that a lot of our lenders were having to be a lot more lenient, and almost with site visits, instead of sending a monitoring surveyor out and then obviously doing the checks and releasing payments, they were having to do that off of photos. So yeah, I think it's something that I'd be open-minded to with tech, but I still feel like at this stage development is quite a personable thing.
I think it's interesting seeing some of the advancement of some of these platforms, particularly on the broker side. A lot of them are now able to basically take different sets of terms which are presented in completely different ways, and then essentially get to the final point, i.e. what's going to cost the client, by breaking down the nonsense. I think that's been the problem with a lot of kind of cost comparison style broker platforms, is in the fact that if you ask 10 lenders for terms, you'll get it presented in 10 different ways. Whereas I think some of the brokers are waking up to that, and actually the platforms are now very good at taking, okay, well, here's a product, it's got no exit fee, how great, but by the way, there's a 10 grand surveyor cost that they've lumped on there, well, that's where your exit fee's gone. So they're able to kind of, you know, unpick that a little bit more. So I think the way that that's being put forward now is actually going to be a big help to lenders that don't necessarily, you know, the thing about development is very different to bridging, where you don't necessarily just compete on cost. There are other areas too. So if you can get to the point of cost quicker, you can actually try and understand the whole lender that you'll be working with a lot more easily.
We have a question from the audience, which I think just kind of hinges off what Emma was asking a little earlier, whether or not there are parts of the development lending underwriting process that cannot or should not be automated, given the sheer complexity in development lending. And this is probably one for one of the lenders to answer.
I think KYC is probably one. That requires a you know, very in-depth review, and structures vary on every single deal, whether they're onshore, offshore. So that certainly I think can't be automated. I mean, you can set up a room for everything to be saved into, right? But that can't be automated, I don't think. Maybe at some point it could be. And also when you're reviewing a QS report as to how a building is actually going to be built. And that's one of the parts, I think, when you're in origination presenting back into a credit committee, is you've been on the site, right? You've seen it, you've spoken to the developer, you know their build plan as to how they're going to build this. Sometimes I feel it would be really helpful to bring a drone out to site with you and fly it around, and then present it back to credit committee, say this is where we're building, this is what it looks like, this is what the building, here's CGIs, and let them get to the same thought that you're at. But when you're reviewing a QS report, it's not just simply numbers. it's the end spec, it's the build method that's going to be utilised for the duration, and there's so many different factors to that. I don't think that process can be automated either.
I think there's two parts to this. So there's extracting the information, which needs to be streamlined, and that's not necessarily a human thing. That could be with a sort of software, but ultimately when it comes down to making the decision, because sadly there's no such thing as a completely clean development deal. There will always be something, whether it's a title issue or whether there's dispute over the land, or as Emma said, in the method of building. It's going to need a human to review that, assess the risk, saying, can we either, should we either A, put more resources into trying to fix this problem, or B, can we take a view on it for the sake of getting the deal done and pushing this through quicker. And I don't see how that could ever be automated.
Out of interest, what parts of the development finance process desperately needs improvement through technology, and what would have been a lifesaver over the last 12 months for lenders and brokers in terms of efficiency?
I think third-party professionals adapting to change. I mean, historically, this industry has been quite old-fashioned. So from our side, it was mainly lawyers adapting to change. For example, DocuSign. We don't necessarily need to print 300 pages of a document for it to be witnessed and signed by the client. It can be done within a couple of minutes. I think it's just changing perspective, changing people's minds, and in an industry where it used to be quite old-fashioned in terms of third-party professionals. That would be.
Sorry, Kathy. I'd be willing to bet that everyone on here and everyone listening has got a project that's been delayed somehow by a council planning portal, or some sort of issue about their planning their website.
The DocuSign thing amazes me, that it's only now we're grasping this. Why didn't this happen years ago?
Yeah, I think the lockdown forced people, really, didn't it? And we were using DocuSign before lockdown, but I just don't see why so much paper has to be wasted.
Yeah. We've used it for years. We have used it for years, but there's a lot of lenders that still won't accept it. I mean, I get legal documents, but simple terms and things like that, there's no reason. It's literally back within seconds.
Absolutely. Yeah, we hardly print anything in our company.
Yeah, I mean, I think it's true that the pandemic has accelerated some change that people were reluctant to adopt for no other reason than cultural. Those things have been forced, and that's a good thing, and they won't go backwards. I'm interested to hear, I think it was Emma saying that you don't think that the virtual site visit thing will become a thing in the long term, that actually doesn't work terribly well. As someone who is supplying technology into the industry rather than trying to operate it, that's interesting to me that you think that bit just is something that won't stick. I think it's interesting that I think the things that you're all talking about that make things that where you want to see improvements is in visibility and efficiency, not it's making sure the technology doesn't get in the way, and as I said at the start, not introducing technology for technology's sake. I mean, I'm interested from the broker's point of view. Would you be interested in things which allow you to see the progress of a deal? So I absolutely understand that you want the face-to-face contact to be able to explain the client, and that's kind of your role in the process. But how much visibility do you get of how the deal is progressing once it's in that underwriting process? Can you see it? Can you see what's happening?
Good old-fashioned emails.
Yeah.
It's updates, phones. It's very simplistic. It can be something's gone to credit and it could take some time. We've got no idea. Are they looking at it for 4 days, or has it not quite got there? Is it still in the queue? So I guess the update and you know, like a processing timeline would be good as to what position it's at. Only for when you're being chased. How much benefit that brings for the amount of money, the cost to actually bring that in, is it worth it? Is it, you know, a 30-second phone call? I don't know how much benefit that would bring to what it would cost. It is nice to be able to log in and just see where your case is. But like Natasha said, what we do is very much hands-on. It's very much people. It does need an individual to sense check to read a situation. So tech is great, and if it can obviously bring more to the actual processing and getting to that elusive completion, yeah, great. And again, in tranches, I think that there is something that you can definitely bring there to make that process more streamlined and slicker. But to actually get on the front end of it, I'm not sure. Natasha, what do you think?
Yeah, to be honest, I completely agree. I think there isn't really anything in place for us apart from just constantly chasing lenders and communicating back to the client. And I think from a cost implication, like you said, Adele, I think that the cost for us to have something like that, I mean, I don't know how, I would imagine that it's quite expensive to sort of implement that kind of technology. But it's not my remit, so I wouldn't really know. But if it was a really costly thing, I don't think it would be as effective for us to use. But if it was almost like a sort of elaborated kind of CRM type system that you almost said, like broke down all the clients and broke down all the stages they were at, then that would probably be quite helpful. But for us, it's just a lot of back and forth kind of emails and calls and chasing. So if you could almost package that up for us and make something, then I'm sure it'll be useful.
Yeah, and the kind of the technology is improving greatly for being able to consume data from different sources and package it up and present it to the end user. You know, to provide user experiences that are consuming data from all sorts of different sources is becoming more and more easy. I mean, you know, if you look in the retail banking world, the kind of thing they're doing with open banking, allowing access to all sorts of data from different institutions, that the technology is there to do that. I think it's going to be a question of how strong the drivers are behind people wanting it, but the costs should be coming down rapidly for that kind of thing now. Yeah.
Actually, you mentioned a little bit earlier about how technology, I think this was to do with sourcing systems, that it can offer a bit more transparency in terms of fees and how costs are presented differently, because you know, in the specialist lending market as a whole, there's little standardization, and especially in the development space where it's increasingly complex. What does the panel think about technology being used for greater transparency in development lending? Are you seeing other cases of this? Do you think it's a good thing?
Firstly, I think, you know, the two problems is you've got no one to necessarily police it, and secondly, you've got no one to you won't have any communication between lenders, because we're not going to help each other out. So how do you find one way of doing things that makes it easier for, firstly, the broker, and secondly, the consumer to understand what product they're actually buying? And I think the problem is tech can sometimes be used the wrong way, and it can be used to actually manipulate a position that can make it a little bit more distorted. We put a really big emphasis when we send a quote out on being 100% transparent in what we do, and it's, you know, our standard way of quoting isn't particularly glitzy, but it's very, very, very easy to digest, and that's the main thing that we want to get across. Is this is exactly what our product is, because the majority of our clients are builders who want to get on a build. They don't want to be dealing with finance companies necessarily, and so they want to, you know, they want the easiest ride possible. So actually, they don't like finding out that when they're redeeming a loan, you know, by the way, you missed out X, Y, and Z fees that were hidden in the offer letter. So again, I'd, you know, be fully open to a better way of doing things between lenders. I just, again, struggle to see how that can be implemented.
I think that's a good point, and I think that's why developers, when they just want to get on and build, brokers and introducers are a really good option, because you have the ability to source the finance for them, present it back to them, and make sure that they're aware of all of the aspects. But I think if relationship management is always very important, and will always be so regardless. But I think when you're initially quoting for on a development debt or a new development, people are interested, and developers want to know how much equity they have to put in and what's the total cost of debt. And you have to be transparent. We are quite transparent. Our indicative heads of terms have those two highlighted at the top: total cost of debt broken into arrangement fees, interest and exit fees. And we have the total equity and how we've calculated that and the sources and uses. And I know that when I send that off to an introducer, that then is going to be compared with the other offers, because that's your job. That's your job, to source the best development debt package that you can. But what it doesn't allow for is to assess kind of post completion, you know, the SLAs and the turnaround times and the relationship management, you know, and how we are going to treat the client after that, because it's not just a one-stop shop for the acquisition. It's going to be a two-year development period. The underwrite, you know, are we going to make people cry with how difficult it's going to be, or is it going to be a nice, easy process?
That's something that we bring into when we present terms back to a client. It's a very simplistic spreadsheet with each of the terms compared, and then there's footnotes about how tranches are handled, general turnaround times, any previous issues that we've experienced, just to feed back, because it is, like we were talking about, criteria being important, the overall feel of the package and the experience that you give to clients will come back to us if it's not being positive on I mean, a tranche being delayed it's not great. So you're right, it does need that personal touch, it does need that human interaction to be able to do that.
But at the very start, when you're looking at facts and figures and equity and debt costs, then I would welcome the ability to sort of to have access to those types of systems, which would allow us to put in our competing terms.
I'd like to move the conversation on a little bit towards how developers could potentially be using technology. I know that over the last year or so, developers have found it increasingly difficult to find reasonable land sites. And where do you see technology playing a bigger part at the opportunity stage for property developers?
I'll start. I feel like we've already seen quite a few companies that have given people the ability to be able to source sort of off-market deals by pulling data from like the land registry and then the planning portal and stuff like that. So I think that's really probably helpful for developers to be able to use those type of software and look for land. Obviously, stuff like CGIs as well. I think that's probably in developers that are almost direct to vendor, and then when they're trying to negotiate that purchase price, or even JV with the person that they're talking to who doesn't generally do it on a day-to-day remit, it gives them something to present and as a visual point of view. And I think even I can't remember who mentioned, but someone said, I think it might have been Emma, that said about even the digital property viewings and things like that. Like, it seems like there are so many opportunities online for developers that they almost have to, it's given them the opportunity to be able to look for themselves instead of always relying on kind of other things as well. So there are softwares out there and giving them the ability to be able to look for sites. So I think they just kind of will have to almost do that a bit more going forward, especially given the pandemic, with there being sort of less land opportunities and higher material costs and things like that. It's really squeezed their margins, so they have to almost do quite a bit of research on their own, and there are plenty of sources online for them to be able to do so.
I think if we're considered an old-fashioned industry, then relative to that, builders and developers are dinosaurs. Invariably, they are so resistant to change and new things. And for example, an example of that is, for example, building methods. the majority of the builds in this country are still done with, brick and block, whereas there are so many new ways of building houses, but they're not interested because this is how we do it. And then likewise, it's a lot of the margin, a lot of profit margin exists within the purchase, and and that's the skill often of being a developer, is how well can you buy your sites, and that could be done on obviously option agreements, etc. But that ultimately, I don't think, again, you can't take that kind of human element out of it because it's a skill in itself. So yeah, there may be tech that can improve that may give you more opportunities or wider spread opportunities, but ultimately having an eye for it is a massive part of it.
We have 5 minutes or so left. I'm just going to go through some of the audience questions we've got, just to move on to those, because we've had quite a few come in throughout the debate. There was a point earlier that I think Emma made around Dropbox and access to central information. And so the question from the audience was whether lenders will see the value in something which utilizes blockchain to provide shared but secured data. I don't know if that was something that, Mark, you might want to answer.
I can. Yeah, obviously blockchain has been a big buzzword around the technology industry for a good few years now, and I think it's fair to say that beyond its use in cryptocurrencies, people have been kind of looking for a way of utilizing the technology. It's kind of a technology. It's been a technology looking for a solution, and I'm not convinced that blockchain is the right answer for that specific use case. I think that the kind of blockchain distributed ledger technology is very good at distributing, well, at distributing a ledger. I mean that's kind of the use that it has in Bitcoin, for example. But I certainly think that having secure access, some form of secure access to a single point of truth, I think is going to be very important. And if it is blockchain that provides that eventually, if that's the technology that provides it, then great. But I think that there are many other ways of doing that which may be simpler than implementing a blockchain solution.
I think with blockchain, it's very time consuming and it's expensive, and it's not branded, so to speak, with a it's if for instance a big name were to step in and disrupt it, or land registry take the lead, it would replace blockchain indefinitely. I think it's not the fact that it's so time consuming, although it offers a lot of benefits in the transaction, but it does involve a huge amount of paperwork. What solves the paperwork from an underwrite perspective isn't so much the title or the legal documents. That's all looked after by the lawyers. From an underwrite development lending perspective, it's the sharing of the information that the professionals that are appointed by the lender need in order to get their report issued in a timely fashion.
Yeah, and to be fair, you could use a blockchain implementation to distribute information. That would be a perfectly sensible use of the technology. I'm not convinced I'm not convinced it's necessary use of the technology, if you see what I mean. I think that there would be cleaner and easier ways of doing that, I suspect, because you've always got the issue of trust and authority with when you're talking about distributed information. So how do you trust the source is the of the information, I think is always a question, and that's one of the things blockchain's trying to solve. But I think there are probably easier ways of doing it in an industry like this.
We also have just one other question, which was about technology. What technology do you use as lenders to improve the underwriting process in order to have a better grasp of data, and also how to interpret that data?
Sorry, go on, Kathy. Go on.
We have our own in-house platform that we've been building for years, and we're still working on it to make it more enhanced. I mean, our aim is really to cut down the lending process from months to weeks to days, really. So that's the aim.
Yeah, and as I said right up front, the aim of all technology should be to improve the business process and to answer business need and to improve efficiency. You know, if you're introducing technology that doesn't do that, then don't.
Thanks for that. We have now hit 12, so I'm going to have to kindly bring the event to a close. That did come around very quickly, and that hour flew by. It was a fantastic discussion, and there were some great questions asked there by the audience. And if your question wasn't answered today, I will be presenting that to the panel later today, and then potentially including those answers in our write-up next week. So I just want to thank you, APAK, for partnering with us on this. And also thank you to our fantastic panel for taking the time out of your very busy schedules, I'm sure, to be here. And I also want to thank you, our audience, for joining us and for being so engaged. We will be publishing this roundtable, as I mentioned, in full next week on DFT for those that weren't able to make today's live event. And if you enjoyed this one, please do check out our virtual roundtable calendar for this year, which is both on BNC and DFT. We're holding events pretty much every week, and we're booked up until August, so plenty of educational events for you to tune into. If you'd like to sponsor one later this year, feel free to drop me an email at beth@medianet.co.uk. And also, for even more insight into the specialist finance sector, please check out the latest issue of the print Bridging and Commercial magazine, which you can find on our website if you don't already get the print edition. But I would like to wish you all a fantastic afternoon, and we hope to see you more in person soon. Thank you very much.